does blockchain really solves some of the promise of back-end efficiencies which comes with it.
Sopnendu, fantastic to see you back.
Oh, wonderful to be back to your studio talking to you. We missed a couple of in a month. We're trying to catch up with us with you on the schedule. It's wonderful to see you back again.
Yeah, great. And there's a lot to catch up because it's a while since we spoke, and you're always busy, always a pioneer, always doing incredible things. So, what have you been up to? I'd love to hear. I know that's a very broad subject, but start anywhere and we'll dig in.
Absolutely, because we're in interesting times. The whole crypto fiasco, then comes this massive correction on the technology, broader landscape, jobs getting cut, and then same time when I was in India, I was talking to you. My optimism of what technology can do just went 10x times what I saw in India. So it's not bad when you balance out good news, bad news, and you think about how future will look like.
We'll dig into India in a bit, but how's the mood in Singapore? Because you're at the forefront yourself, helping drive Singapore forward, and then crypto market has its massive correction. We've got the frauds and all of the things that we've seen in the past, but it's a function of the space still as it's early. And as you say, technology, is going backwards in terms of not the technology itself, but in terms of the shares. How do your colleagues and the country, how does that feel about it? Or they're long-term players and they're like, this is fine, it's all part of it.
Raoul, that's a question. It's a difficult question now because despite when somebody thinks about technology 5 years, 10 years down the line, the risk of failure from a public policy perspective is quite expanded in terms of how people perceive a public policy officer like me pursuing a certain technology stack. Because it is okay for a private sector to indulge in an experiment which could lead to billions of dollars being lost. But when it comes to public sector technology policy, picking up such technology quite early on, early in the game, has own risk. And as you know, we have been experimenting with a whole range of digital technology, from digital asset tokenization to DLT network and CBDCs. Definitely a lot of questions being asked, as we expect public to be raising questions, concerns on such technologies' future. Of course, the market itself went through massive turbulent times. And as a regulators, we also went through a series of measures which we have to introduce last year to ensure consumers are not exposed to such a risk. But still, it's a challenge, I must say. And it is definitely, I will say, it's a setback. And from Singapore perspective, we continue to be focused on the experiment part of this journey. We continue to look at use cases which make sense to us. For example, things like Project Mariana, which we started last year to explore the use of such technology, digital asset for automated market makers, settling digital assets for financial instruments. But it's challenging. I must say it's challenging. It's not easy.
To be fair, Singapore's done a good job. I mean, your regulation has held up well. The exchanges you've overseen and the participants you've overseen, you've been good in your selection process and how you've regulated, I think.
But things like even forget about the crypto market. Even things like the Australian Stock Exchange upgrade to the new technology, which they had to stop. a massive impact on the tech stack itself. So it's really comes at a stage when you have both the financial instrument and the underlying technology getting into a lot of question mark. So this I mean I agree with you, is a part of this whole journey, and Singapore will always try to keep itself ahead in the journey. We will continue to experiment, but definitely I would admit it has put some roadblocks, some thoughtful rethinking some of the strategies. But I don't think we will abandon this whole journey in this space. But we will see how it goes. But definitely, we are still on track on some few of the projects I just mentioned.
Hey everyone, Raoul's Venture Crypto, it's really my flagship show. It's where I interview the best guests in the world, people you never get on another show. I think it's the best show in macro, crypto, and Web3 combined. In fact, that's what it does. It covers everything. But really, it's all about the revolution in Web3 and crypto. And I'd love it if you got it every week in your inbox. All you have to do is just click on the link below, pop in your email address, and you'll get notified every time it comes out. And you don't miss anything as you take my journey into the exciting new world of crypto and Web3. Thanks.
So, would you mind talking people through the Australian example? Because I think it was interesting because they were trying to pioneer and then basically said, "No, we can't do it." So what was, from your perspective, what was that about? And
I mean, Raoul, I don't know the details of what went wrong, but if you read what is coming on the press, it was a long multi-year project, and a lot of money was spent. And then there was a step back and saying, look, this is not a viable project. And the tech stack which they chose was not able to execute the backend efficiencies they're looking for. Well, there could be many ways to process this, and especially some learnings out there, because if you are running a multi-year project, one thing I have learned is that you pick your you take a use case and you split into the lowest possible logical blocks of functionality, and you start delivering them in pieces, and eventually you're going to stick it together. But when you bring the whole thing together and try to shift, it has its own challenges. I would say, in hindsight, that could be one of the learning, but I'm not exactly sure what went wrong beyond that broader statement that it was not delivering to its requirement, and they had to leave the project unfinished with millions of dollars being spent. And that did raise a lot of question on the viability of the tech stack itself. Does blockchain really solves some of the promise of backend efficiencies which comes with it? But I don't think we should be blaming the technology per se, because we got to think carefully. There could be external factors which drove to that conclusion rather than the technology itself. And it's worth studying, and we will study that whole piece of journey and try to learn from that. But it has put significant stress on corporates adopting blockchain as part of their tech stack.
yeah, it still feels to me that the hypothesis that the securities industry will move to blockchain over time, just for settlement efficiencies, cash payment efficiencies, ownership efficiencies, seems to stand up. But maybe the technology is not fast enough, the throughput not, the TPS not high enough. There's some.
No, that absolutely. I mean, Rahul, I'm not saying in any way that the technology has failed completely, but this whole project does teach us some of the way we go about implementing things. We are pursuing in our project experiment called Project Mariana the whole settlement, FX settlement for exchanging assets on the network. Well, that little project on its own seems to be making things more efficient. Now, when you scale it in production grade settlement process, we go to see that what are the other tech challenges which comes with that. But that's a journey any tech stack has to go through, rather than putting a conclusion ahead of that piece of trialing and checking and upgrading the tech stack. So anyway, what I was trying to say that that project was kind of had a huge expectation from the market that if it was successful, it could have created a global benchmark of how you move your backend security settlement infrastructure to this new tech stack. But that didn't happen. I'm sure all of us who are in this tech stack journey will look at it and see where we can go with this.
And so you think maybe the way forward is to be more specific and
Yes.
smaller, more granular,
Yes,
test
indeed.
that, prove it, expand, as opposed to try and build your whole tech stack in one go.
I mean, if Raoul, if
Because then you can fail small.
forget about blockchain as a technology, any project, when you do a huge single large chunk migration, the risk of failure is always there. It can become very expensive. Doesn't matter what tech stack you're using, it can also fail. So I think there's some foundational basic project management learning out there. What can be used as a framework to implement large tech upgrades.
So what parts of DLT are you still experimenting with?
We are still experimenting with the core tech stack, settlement part, asset tokenization on the network. We're still onto those things.
Talk to me about the asset tokenization, because a lot of people have talked about this for a long time. When I first got into the space, I thought this is where it's going to go. It's not got there yet, but it's getting there. How are you seeing that space develop?
So if you do a table and you think about fixed value and variable value, and you put all the possible on your left side of the table from tokenizing currencies to tokenizing assets, and look at what instrument is helping that whole process. I think there is this trend where we can see that the focus on privately issued payment token definitely will see a huge pause. But when there is an effort to tokenize a reference ownership of an asset, or natively issuing an asset on a blockchain network like a token, those two buckets, which has got that variable value, will see a progress, because that's the only one which doesn't impact monetary policy. It doesn't impact existing financial system. The only impact it has is making the existing asset ownership more efficient, and the payment process which goes with that more efficient. I think that safe boundaries of those two asset class does allow all the technologists working in this space to narrow down and focus on that. So by virtue of that safe space, I see that kind of moving forward with the technology we have today, because people will step out of the payment instrument part of the asset tokenization. They will shift to this reference ownership asset experiments or even deployment. Now that lives on the payment side, the CBDCs, which we'll talk about, I guess, in our discussion. But I'm going to keep it separate.
Exactly right. The settlement layer, I think the CBDCs, I know this is probably contentious, is probably a better way of doing it, because it's the government on ramp and off ramp, and they feel comfortable with monetary policy and the control over that element. Yeah. And then everything else, what you can use blockchain for gets interesting. I have a feeling that I'm very closely watching NFTs, and not in the art collecting or community space, but the fact that this is a contract that is recorded, transferable, and that there are many use cases that even in your kind of remit of fintech, that it feels that things like insurance contracts, derivative contracts, and others fit well into that technology. Again, that's outside of the the currency element, but just an efficient way of recording, transferring. How are you thinking of NFTs, or you just throw it all in as part of the same thing?
NFTs, for me, NFT, which is the second bucket of that asset ownership, which is the natively issued tokens, is almost like a company issuing equity directly into the blockchain network, and that piece of code represent that asset ownership. So it has been kind of diluted by this whole art collectibles and all this thing in the network. But assuming that piece of technology is now becoming, or in future will become, a way people will issue ownership on their assets, definitely it is promising. What we got to see, whether by virtue of issuing on the network, does it make that whole process of ownership and transfer and settlement super efficient? On face of it, it looks yes. Why not? Because the NFTs, at least from a tech stack perspective, seems to be efficient. You can buy and settle and exchange NFTs super efficiently today on existing apps. So, what can we do to move that piece of technology and piece of process to financial instrument? So that's what I meant by the second bucket was actually, in a way you can say, NFTs in current form. The issue which I think we got to answer there is, can existing payment infrastructure still interact with this NFT world, which lives and operates on the DLT network as a mechanism for settling payment on when you transfer NFT from A to B? Now, do you need a native coin of that network to facilitate this transfer of assets on that network? Now, some of the answer people are thinking about, will CBDC form that role, or a stable coin, let's say from so-called stable coin to well-regulated stable coin? Will that be the preferred financial instrument or payment instrument which will facilitate such network on that network for transferring the asset? So I think that's still a work in progress. But definitely at this point in time, I can say with all certainty, the role of privately issued money is close to zero, at least from a public policy perspective.
When you talk about privately,
like
private money,
Bitcoin,
you're talking stable coins.
No, I think I still believe stablecoin is somewhere in cusp of being a regulated money, which backed by well-regulated assets sitting in some custody or some trust bank. And I'm keeping stablecoin away from the pure Bitcoin money. But the role of the Bitcoin type money being used to buy and sell such asset is questionable now.
And how about things like Ethereum, where you're renting the network by?
I classify that as a utility token.
Yeah.
As long as this coins stay within the network and they do not contaminate the currencies, I think it's okay. I think the challenge is when this coins has its life of its own, which goes outside the network and become a speculative asset. As long as you are buying Ethereum and they're being used for driving application development, all the gas fee for doing your real work, it is okay. The challenge is what happens beyond that. I think that's where the issue has been till now.
So let's dig into stablecoins and CBDCs. So obviously people want regulated stablecoins, just because there's so much uncertainty around some of the stablecoins out there. And you've been, a huge driver behind the CBDC, global initiative. So catch us up with where you think everybody is with CBDCs, and then we'll use that as a stepping off point into India in a minute.
Yes, sure. Absolutely. Well, CBDC, as you know, we have this two clear-cut bucket. There's this wholesale CBDC, which is kind of an efficiency infrastructure along with the payment infrastructure for cross-border settlement. I think BIS has done many experiments, I would say, in many countries. In fact, most of the major mainstream economy have now experimented with the wholesale piece, and they have put reports and demonstrated successful possible future infrastructure which will run on wholesale CBDC, especially for cross-border payment settlement. BIS has its own project which they're looking at the whole multi-jurisdiction MCBDC kind of product architecture. If multiple central bank have to participate using CBDC as a way to settle cross-border payments between different countries. So that's where wholesale CBDC has gone. On the retail CBDC, if I'm not mistaken.
Sorry, just one quick question about the wholesale. How far away do you think we are before we launch some global initiative so we can do this, wholesale settlements and payments?
I would say from an experiment perspective, it has everybody has run through that course. I think there is nothing left in public space between central banks and technology and experiment where we got to do more experiment. I think that phase is done. Now, to implement a wholesale CBDC, you need a bunch of things to happen before that. And one of the things which has to happen is that how do you connect the domestic payment infrastructure, the underlying hardware infrastructure between multiple countries. I think my sense is it will go through that process. Project Nexus, for example, which BIS has started, it talks about how do we connect domestic payment rails. Back off again, Singapore played some role there because we connected to Thailand, now to India. Is now waiting to get launched with Malaysia. So first layer of this will be that Nexus kind of project where you will see multiple jurisdiction connecting the domestic rails so that money can be transferred from almost like a domestic payment transfer. And then when it comes to the settlement piece, there will be this second stage where they will explore to deploy a wholesale CBDC as a form of settlement coin. But that will happen if the first one becomes successful. So I think that's where the journey is. The good news about wholesale CBDC, Raoul, is that the mainstream central bank are engaged in this process. BIS is engaged in the process. So there is this safety net of very thoughtful regulatory participant who are making this go to the next step. So I would predict it should not be that far off to think that you will see a production grade wholesale CBDC being deployed across the border payment.
And will it use multiple blockchains, or is there a?
It will be multiple blockchain because I think that as a central bankers, we think about interoperability as a part of the principle. We will mandate as a collective wisdom that countries can choose what network they want to choose, what technology they want to choose to tokenize those coins. But it has to have the principle of interoperability as part of that design.
Yeah, because if you're running on one blockchain, which is a public blockchain, and somebody else is running on some private infrastructure, they need, if not, we don't have a settlement layer.
We got to have interoperability. I mean, part of the work was done in, and if your users want to understand more, I would strongly your viewers want to know, I would strongly recommend them to go to a website called Partior, PARTIOR, which is a joint venture of DBS, JP Morgan, and Temasek, which actually talks about a public infrastructure, market infrastructure, which allows such kind of infrastructure to be built on. So there is this real investment and development going in the space, which makes it much more real than other things.
And okay, let's move on to the private.
So,
Go
no,
on.
so before that, the retail CBDC.
Yes, that's what I mean. The retail CBDC. Sorry.
Yes, I think that's interesting because almost all central bank, including us, we did not see a need for retail CBDC because our domestic payment system have become super efficient. Zero cost, 3 clicks, money is moving instantly. There's no real need for a retail CBDC. But I was in India. India launched their retail CBDC. We'll talk about it. It's just impressive. That test they're doing on production, it just blew my mind out that what can be done with that.
Talk me through that. What is the difference, right? So it's very subtle, like a payment system like UPI in India or the payment system you've got in Singapore, but you're saying, wow, this whole CBDC retail blew me away. How? Why? What did it do?
Well, that's the little story because when I'm a Singaporean, I was traveling to India and I have a bank account in India. So I requested RBI and the Indian bank where I have an account and I want to participate in a closed group testing they have launched on the e-rupee thing. First thing, the moment I got into that app, it was a delightful app, and I was thinking that it's just a little bit of a piece of a cute piece of application. But when I started playing around, means my brain started racing around what can it do in that space, because what in that experiment, it's almost like that. I mean, it is like they have taken the sovereign currency and they have tokenized that, issued the e-rupee through the bank as a distributing channel. So the banks have issued the app. If you get into the app, you take money from your bank account using the UPI rails. And interesting, they're using UPI as underlying infrastructure, UPI rail, and you buy this tokenized cash on your wallet. Now, you would wonder what beyond that, what can you do with that?
Yeah, because UPI is so good.
Yeah, so good. Now, because that cash which is in your wallet, it becomes a payment process now. Now, when I'm sending that money to you, for example, in that closed group testing, it is not going through some account debits anymore. It is just a simple cash exchange happening between two of us. It definitely brings down the underlying infrastructure cost, especially for low-value payments, further low-value payments, because now we are not debiting an account, settling in things. It's pure cash-to-cash transfer.
So it's acting like notes and coins.
Yes. And in fact, it has got a coin, it's got a note, it has got all the denomination, and you can actually hold coins like a stack of coins. And I think they're still in the process of putting a whole set of use case. And I was thinking forward-looking. For example, if there is no internet and you go to a remote place and you don't have access to internet, you can't use UPI rails to pay somebody. And if you have money in your wallet with those cash sitting there, you can actually transfer to each other, pay that bill at a merchant terminal using NFC enabled transfer. Well, they have not done it now, but I think there's a future plan to bring it part of that thinking. So offline payments becomes a huge. Today, we must not dismiss the number of offline payments which happens in a large country like India. Now, if this becomes an answer to that, and I'm pretty sure if this process is as frictionless as I saw, people will perhaps get out of holding paper notes, get into this mode of this form factor. And that could be many social reasons. It could be security, it could be safety, it could be contingency, especially in a where you are not sure about the internet infrastructure. It could be very well some amount of anonymity if there is a need for such value transfer. It dramatically creates the market infrastructure you need to replace expensive, risky paper note process. And for a large country like India, it takes India to the next layer of market infrastructure of payment processing, because you just took billions of cash into this new tech stack and made it efficient, useful, relevant to those segment of population who still believe holding offline payment as the preferred mode of transfer. So to me, that's and who knows? And I asked the question: Can I buy NFT using this tokenized cash? I think the answer would be yes. Why not? This could be an answer to that question. That can this operate on a network where NFT can be used buying this e-rupee? If there's an NFT in that market for which can use e-rupee as way to buy and sell this assets. So what India has shown that it has taken a step forward, putting a serious effort in building an infrastructure in this direction of retail CBDC. If a large country like India adopts this, it becomes a mainstream tech stack. And same thing China has done. I mean, I have not seen the Chinese ERMB personally, because I wish I can go to China and see that. What I'm hearing, they also have built a similar infrastructure. Could be a different model, I don't know. But what I'm saying is, two large market, China, India, have taken a step forward in taking the tech components of the crypto world, and now they're applying seriously to remove the last mile inefficiency in the payment space, which is cash.
It's incredible. There's, it's weird because when you get to the Western world, everyone's like, privacy, how dare you do this? I'm half Indian. I spend a lot of time there. And people don't understand, the scrumpled up rupee note system and, how middlemen get in the middle of this whole system was desperate for overhaul. And if you ask an Indian, I was speaking to our CTO at Real Vision, who's also Indian, about what it's like being in India right now, because he's moved back there. He's like, the issue of privacy is very low down versus access to money.
Yes.
They're just... It's a different need.
It's incredible that the way UPI has impacted the lowest category of income segment of population, the QR payment, that whole interoperability, the whole design where you don't need to depend on a bank app to move money. You can use Google Pay, Phone Pay. It has become a natural reaction. If I ask somebody who is driving a taxi or a vegetable vendor how you want to get paid, the response is Google Pay or Bheem Pay, whatever they are comfortable with. Now imagine the same vegetable vendor and the roadside food stall late in the night don't want to hold on to cash, and they now switch into this e-rupee. You have just dramatically gone down to the last mile of financial risk management, safety net, and build that resiliency you want. I mean, I would not say it's hypothetical anymore. Amount of dependence we have on internet to stay running, to do our financial transactions is just incredibly high. Imagine there's a breakdown on internet and you can't access internet. I'm sure a lot of us will get stranded in some street, can't even do payments. Forget about...
So how does this system work? Is it Bluetooth or... how can I give you money if I'm standing opposite you and we're chatting and I'm like, here's my 2 rupees I owe you. How do I send it to you?
Well, they're not done in this particular phase. But when I spoke to them, I think they're looking at NFC as a way to, so we can actually hold the 2 phone. We are holding offline e-rupee. We can just communicate, and you don't need an internet. And it has got all this. I was playing with this thing. We switched off my internet. I went to airplane mode, and I can see all my rupees showing up on that particular wallet. well, they've not done that offline piece yet, but I can see where it's going. I think China has done it, but I've not seen it myself, but I've heard China has done the offline payment also. But Raul, what I'm trying to say, whatever has happened to this technology in this crypto space, it has definitely triggered this. And if that didn't exist, this would not come. Let's pay some respect to the to the pioneers who created this journey on tokenizing money in this DLT infrastructure. They have triggered what we see now, the future of payment, especially low value, last mile cash intensive sector. And who knows, this can also become a interoperable money cross border. Countries and multiple countries can come into some kind of bilateral relationship and say a multilateral relationship. Look, today we bring dollar cash, you bring multi-currency cash to different countries. You go to the local market and exchange money. Maybe this is a way to do some bit of cross-border transfers.
Maybe it's an applications layer on top. So I'm a tourist. I come in with my Singapore dollars.
Yes.
I can flip them into rupees on an app. It's done in seconds.
So but I think that you can only think those use case if you take the first step. India, China have taken that first step of doing it. I think that's an encouraging. In fact, Singapore also has started. We have a project called Project Orchid, but in a very limited use case, mostly on the vouchers side. But I think directionally there is this glimmer of hope that retail CBDC will find its path and relevance in large markets, and that will spill over to smaller market, and then it can become a bit of a global form of money, which you will see becoming mainstream in years to come. But again, I was just blown away by this amazing.
And it's weird, as I said, everybody I see, I just spoke to another friend today who'd just gone back to Mumbai for the first time in 3 years, and his jaw was open. He's like, I can't believe what's going on here. He's like, he just came out of the UK. He's like, the UK feels like 50 years in the past suddenly.
And this is the role of a public good. How the digital public good. I was in the G20. I went to India for a G20 meetings, and one of the topic of my meeting was the role of digital public good. If countries build highly resilient, interoperable, accessible digital public good, it can bring that amount of innovation on that infrastructure, and you leave to people's imagination what they can build on it. So there is this, Raoul, I would argue, back to our original question, in the space of DLT, there is a desperate, if I have to headline this discussion today, there is a need to find a digital public good in some form for a distributed ledger network use case. Because if you think about payment process didn't become a super success till you saw likes of UPI, Pay Now, which kind of digital public good came into production. And they created that experience which made payment easier. Similarly, on the DLT space and asset tokenization, there is a need for some form of a digital public good. And then people can build on top of that use cases. So I think when you look at internet, same thing happened. It started with the US Defense Agency putting it for public use, and internet took its own journey and became a global infrastructure. You talk about GPS. If the satellites were not sent and the GPS were not available for public to experiment on it, the whole set of application from Google Maps rode on that infrastructure. So I think in this space, we need a digital public good. I don't know what it means. I don't know what it look like, but there could be a case for this. Chat GPT, who knows, that will become the next big digital public good on which the whole set of AI applications will be built.
How are you looking at that? I know, because you're a technologist. You must be going, oh my God, this is coming fast.
This is,
I know this is off topic, but I'm fascinated.
Raoul, this is not off topic. I would say it makes sense to think in that same way. AI for long was touted as game changer, but it always had a question mark how far it can go. But the Chat GPT has done something interesting. It has created a public good in some form, and which means you don't have to build your own models for processing information. Imagine and that has created that open API on top.
That's
you
right.
can build whole set of application. I was watching an interview with Satya Nadella. He was talking about a use case in a village in India using Chat GPT for language translation, and then that Chat GPT is giving us some kind of form instruction. Chat GPT came in US. It has gone to a village in India as a use case. So you can see that how AI will become super mainstream now. I think we should watch out for the space. Chat GPT will trigger that journey. So back to our discussion, we will require some form of digital public good infrastructure use case to trigger a lot of use case in this space of DLT and tokenizers.
I'm also interested in how AI is going to fit into the fintech arena overall. It feels that what is securities advice anymore? By the time these models are trained in 3 years, it's one of these things where we both say, I know it's going to be big, but I don't know yet what the hell it could be.
Well, I was experimenting with my own name. What question you want to ask to Sopnendu? What question is it relevant in the new world? The kind of response Chat GPT is giving to me, I just blown away, because it hats off to those chaps. And fintech in particular will find a huge a lot of work on fintech which is based on AI may sound suddenly redundant, because I can go to Chat GPT, build a question to give me financial advice free of cost.
I know.
And that whole industry, which was based on AI-based financial advisory, will suddenly, wow, we have a public good which can give you a response far more efficient than a closed loop advisory based on a closed loop algorithm, proprietary algorithm. So you have Chat GPT has made a shift from a proprietary algorithm, closed loop access to an open access. I think what is going to come on top of this is just I can't imagine. I mean, this is scary for a lot of people like us, because maybe the job market. Oh my goodness!
Everything, right? I think it's a moment. I'm trying to think of what this is like. It's the internet plus China coming into the WTO. It's these because that changed global wages like this overnight.
Yes, it did.
This does the same.
Yes,
we need to figure out. We first thought, don't forget, the first thing was, well, just get your kids to be musicians or artists or creatives or make code. They'll be fine. The first jobs to go, it was doing artwork, it's doing music, and with the new GitHub code version, it writes code. You're like, okay, well, we were completely wrong what the safest job is.
And yesterday I did it. I wrote a query that please write me a code for with the UX for demonstrating compound interest in Python, C++. I took a old language, Fortran and COBOL, 4 languages. It just stacks to me. It wrote
in seconds.
Yeah. I mean, it shows the impact it's going to make on the whole.
What is education anymore, Sopnendu? What is education?
Indeed.
What is certification? What is a teacher? I don't even know what a teacher is.
And the definition of education, what it means to be educated, what differentiates you and me when we go for a job interview, is complete. It will change the definition. I mean, what kind of skill set we'll have to find new jobs, what the new jobs will look like.
Now, what it can do to, let's say you're in a village in India, you're illiterate because you've not been to school, but you're smart and everything else. This gives you the same power of knowledge.
Yes, indeed.
You get being highly educated with a huge experience, being in Singapore. And the knowledge has just been kind of equalized. You can both code the compound interest app in seconds.
Yeah, and I mean, this question, if I have to write, if I'm going to interview you, I go to ChatGPT. I'm sure I'll ask what kind of question I'll ask Raoul. And somebody growing up in a small village in India or wherever in Indonesia can go to same ChatGPT. I'll get the same sort of question being laid out. Please ask this question to Raoul because that's relevant to him. There's no intellectual differentiation anymore left there. Other than the human emotions, that comes with that. But beyond that, it is exactly same. I think robotics, which is automating mechanical work, and the algorithm, the brain-related work from ChatGPT, you combine these two things.
And also the other thing I think that's part of that stack is that nexus is the Internet of Things.
Yes,
and this is where this payment rails comes in,
yes.
Because machine-to-machine payments,
Yes.
the car will pay, the toll road
Yes.
will pay, all of this just happens naturally.
So the IoTs comes in. I think it's in a way all the component of Web 3.0 will suddenly explode in terms of becoming useful.
That's right, because it's the transfer mechanism for all of this.
And then this underlying ChatGPT type infrastructure will push. And this came from nowhere. It just came from nowhere, just bang. And it truly says that technology takes its own time. AI was around for how many years now, and people from those piece of code used to write in college, the expert systems code, and now you're talking about all these algorithms. Now comes ChatGPT. You don't need to know all these things. The models are being built behind it. So that journey took multi decades to get here. So it also takes philosophically the discussion to where DLT and tokenization of assets will go. It will stay in this kind of experiment, setbacks, challenges, question mark, bad product, bad behavior, bad exploiter of technology. But if it survives that piece of journey or survives that history of ups and downs, we will be talking perhaps in a couple of years saying this, where did this come from?
What's his name from Microsoft who just said the same thing? He's like, it's waiting for its Cambrian explosion. Moment, that OpenAI, stability AI moment. He's like, hasn't happened yet.
Yes,
we believe it's coming.
It's coming, and I have that definitely. ChatGPT has proven that one moment of, and I'm back to my argument. It is the public good component which will make the biggest transformation. You take internet, you take the example of GPS, you take example of in the payment side, in the financial side, the role of public infrastructure like UPI, Pay Now, stuff like that. Now you get into this ChatGPT. So there will be this digital public good, which will create the necessary incentive to scale up applications into unimaginable possibilities. So
what a time to be alive, eh?
What a time to be alive. But Raoul, I think we should thank to this good news, piece of good news, when technology is looking like, we're in the bad phase. This came as a big savior to this whole narrative. Has technology lost its way? No, I think it is coming back in a much bigger.
Yeah, because as you know, the technology cycle takes a lot of investment, a lot of experimentation.
Yes.
And it looks terrible. It's always that slope. And then it does this. Nobody believes it. And before you know it, that step change happens. You're like, oh my God.
Amount of money, amount of failure in AI space is unaccounted for in many ways. But you see for decades, people have put money behind AI. And they're all kind of left with this, we got something. But never that wow moment. But all that effort, technology effort, business, the AI models effort, all have accumulated to create this wonderful piece of technology now, which you see as ChatGPT. I think it is wonderful to see that things history is repeating itself in proving that don't dismiss technology for its immediate bad narrative. You don't know.
Yeah, technology is not the price of technology. It's not the share price.
Yeah, it's not. Yeah,
Technology drives on relentlessly.
yeah, it will push through, and I'm hoping the same happens in this space also, the DLT space, despite all this massive bad behavior on the market, the participants, this whole bad news. I think somehow I felt that entrepreneurs in this space uh, were way ahead of themselves in creating a market value where foundational thinking has not yet matured. I think that mismatch of exuberance and optimism ran way ahead of its underlying philosophy, tech stack, business processes, which is driving that future impact. And when you have that, market speculators take advantage of the situation and they just create a bubble of hope. And and what happened in 2023 is precisely that the bubble was taken to cleaners.
And that in itself cleanses bad actors,
Yes.
bad uses of capital,
Yes.
concentrates the capital into the project. This is how things get built, right? It's the creative destruction.
In a strange way, I would say that the desire to make it believable by making it centralized was cause of the failure. I mean,
Of course it was.
Yeah, right. The original construct of a decentralized where nobody has an influence on the outcome, and people shifted to a centralized model saying that, trust me, it's a cause of a failure.
Yeah, because DeFi didn't fail because
Yeah.
it's a smart contract. It's a computer program. It just does its
Yes.
thing.
Yes.
It was the humans that failed, as always.
And the human and the desire of the to make it acceptable that there's a centralized infrastructure which is managing this process, so that we are comfortable with that idea, is the root cause of this downfall of bad, and this way it allowed bad actor to participate. And I think, yeah, enough has been said. But if I have to sum up in my head the 2023 moment in the history, I think when we look back maybe 3-4 years from now, I think you would say, sure, thanks it happened so early. It didn't take more money and more investments and more down the line to have that.
And it's going to be fascinating in your seats to see whether you see more DeFi businesses coming to Singapore to build, because they build on top of this applications layer. They dovetail in with what all of these things we're talking about. I think that is a big thing.
Yeah, it will pick up. DeFi is going to pick up as long as you do not contaminate the monetary policy system, because I think too many front were opened up same time. You are doing DeFi, you are trying to issue a currency. So many things are happening same time. I think that there's a need to. If I had in hindsight, this looks more through hindsight thinking. I think the less of indulgence should have happened on the coins, on the currency. More effort should have gone in building the infrastructure, the use cases, the comfort with this new way of doing things, and probably down the line, some form of money could have been created to experiment with this kind of infrastructure. It was all in hindsight, and I think that leaves us with some stablecoin story there, because Singapore's thinking has been. It is okay to look at a well-regulated stablecoin as a form of money if that is required for certain use case, as long as it is well-regulated. I think we're still looking at what policies, regulation required to make it well-regulated, but we have not dismissed it as bad as the privately issued coin. It's still a work in progress. But I would say stablecoin.
When you talk about, I just want to clarify, when you're talking about the privately issued coins, where are you thinking specifically? You talked about Bitcoin and using that as part of currency. Like we're not comfortable because it's separate. What else fits into that kind of bucket?
So maybe the other way to answer the question the other way is better. it excludes utility coin, the Ethereum kind of coin. It excludes stablecoin. It excludes CBDCs. It excludes a token which represents asset. Rest is privately issued coin in that falls in that category.
Yeah. So ones that don't really have an applications layer on top,
Yeah.
so they just exist as they are.
They are, and the native currency within a network, trying to be like a money, playing the role of a money. I think that is definitely a red line for almost every jurisdiction today, and that will remain in that state for years to come. So that's what the market has kind of left with after this massive correction. It's a challenge. Well, it happens. I mean, we have seen in history such thing happens.
Yeah, I mean, I've been in this space since 2013. This is the third or fourth time around where we've seen it because it's very nascent. Listen, as ever, a fantastic conversation, wide-ranging, lots of interesting stuff. And, you know, again, let's see where we are next year because...
yeah, well, Raoul, just to your viewers, I want to leave with something optimistic to look forward to. We do this Singapore Fintech Festival. We are never shy of picking topics which may not be any more mainstream or questioned by the mainstream. And this year, we are going to examine some of this technology issues, challenges, future thinking in 2024 in 3 of our platform. And in fact, in June, I hope I will get you there. In Rwanda, we're going to explore the impact of financial technology in truly making it inclusive for everyone in this planet. So we're looking at Rwanda as a place to deeply examine the role of fintech in financial inclusion. A week later, after that, we will be in Zurich, and that's the place. Perhaps that's the last possible public forum where we will bring the whole crypto discussion back into a debate of how to go forward in Zurich in the Point Zero Forum. And I'm looking to build a set of topics in Zurich to really critically examine what is bad, what has gone bad, and what is the residual topic left for us to pick up and move forward. That will happen in Point Zero Forum. And back in the end of the year at the Singapore Fintech Festival, we will rebuild what has been, rebuild the whole narrative more like a future stack in this space. So still hope is there. 2023 will perhaps give us that opportunity to reflect, and in this 3 platform, we will bring the public narrative back in the space.
That's why I love what you do. You're always very open. You're trying new stuff. You speak to people. You don't mind to have difficult discussions and have an open and listen to people. It's amazing. So, any way I can help you as ever, just let me know. And
I hope to have you in Singapore this time. You please do plan your trip so that
I've got to. I need to get dates early, and then I need to get it sorted out.
Please do. Thanks for having me. Thanks for having me.
As ever, my friend. Fantastic to see you.
Thank you.
You know, it's clear from chatting to Sopnendu about what's just happened in 2022 was a big shock to a lot of people because, people like himself have been working very hard on getting this technology adopted at various infrastructure parts of the global economy, and it stepped back. But in the end, it's amazing because we see all of this, and then he goes on a trip to India and he comes back with his eyes wide open saying, oh my God, it's kind of like he's rediscovered it all over again. And that AI moment that I think is also coming too. We don't know where it's going to come from. And he's opened my eyes to that maybe this comes from government level. And I've talked a lot about how powerful these CBDCs are. And I know many people think, oh my God, this is terrible. But it might actually unlock everything. Let's see how it all goes. It's going to be fascinating to see where this plays out. And we'll catch up with him in a year's time to swap stories again.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.